Hey guys, welcome to the Bitcoin Fortress podcast. It's Sunday, October 26, 2025. We are at block height 920915, Moscow time 880. Mempool fees are 1, 1, and 1. This is episode 187, so let's get right into it. We'll start out with the market action and flows with spot ETF inflow rebound. So these flows mark a notable shift from last week's outflows for the week ending October 24th. The US spot Bitcoin ETF market saw approximately 446.6 million in net inflows. Turnaround suggests institutional buyers are stepping back in after the earlier liquidation phase that we had last week, and actually maybe it was last weekend or the weekend before. Uh, and for those of us watching this, this does not guarantee an immediate markup, but it does strengthen the base under Bitcoin. So that's why we like to watch ETF flows. If flows stall again, expect another test of the six-figure mark. Taking a look at the CoinShares weekly, and again, this was probably dialed back a little bit further than the latest. There was a notable rotation from Bitcoin into alts, shitcoins, as we like to call them here on the Bitcoin Fortress. ETH, Solana, and Ripple saw some buying. And so, once again, can't always count on the ETFs because they are institutional buyers and they will buy and sell to take profits and take advantage of opportunities and whatever. So, again, we don't care about that because we don't buy shitcoins, but it's good to understand those dynamics because it does affect the market for Bitcoin, which we do care about. Whipsaw price action. Um, 657 million in liquidations on the October 22nd pop and fade. So after the weekend pop towards 113, Bitcoin and alt markets dropped sharply as traders questioned whether the bounce was simply a lower high. Volatility remains elevated, and despite strong institutional interest, the market can still print technical negatives. Um, so we have to be prepared for upside and downside, and nothing prepares you better for that than holding all your sats in cold storage and just making yourself a little bit of popcorn. Chart watchers did flag that Bitcoin is still below the 50-day EMA, which is concerning, I think, to the chartsters. And another failure could kindle a deeper retrenchment. So again, expect to see some higher volatility and wild price action as we continue on through October and into November. Standard Chartered came out with a sub 100 last flush call and then up, really a path call, not a price call. The market may still need to clean some positioning before the trend resumes. Um, Again, reminder to everybody that volatility doesn't equal a thesis break. You could still be in a bull market and have a massive drawdown. It's happened to gold actually last week. Gold was down 3 or 4 or 5%, something like that, after going parabolic, which is always a concern when you see a chart do that. So plan your entries before the move, not during. And of course, if macro worsens, meaning rates or liquidity are not favorable, which everybody seems to think they will be, but they could not be, then we could have a bigger flush than what is anticipated. But again, if you buy the dip, you're probably not going to be too disappointed in, let's say, 5 years. Uptober wobble, seasonality versus 2025 reality. So, despite a historically strong October for Bitcoin, at least in the past, This year, the rally is weaker. In fact, it was downtober for a while there. Bitcoin has been drifting. Correlation with high beta assets is breaking down. So, a little reminder to everybody, seasonality, well, that's just a tendency, and it's not a guarantee. And your strategy should just acknowledge that fact. And when a favored theme like Uptober is being tested, and just stay disciplined. And again, of course, staying humble and stacking sats uh, is always the good approach. Next up, let's get into institutions, products, and market structure. So, first up here, we have Falcon X to acquire 21 shares, an ETF issuer. So, there's convergence of a prime brokerage and an ETP issuer means simpler institutional rails and bigger pipes to move the Bitcoin. So, the structural transformation of access does matter. Easier regulated on ramps means wider capital flows, a prime tailwind for our thesis that Bitcoin will continue to go up over the long haul. However, one must remember that more wrappers does not mean more Bitcoin. So, again, you sort of have to prioritize asset custody and time horizon when you are looking at your investments. And if you're Bitcoin only in cold storage, there's really not much else to look at, is there? Capitol Hill is pushing market structure bill. Clarity on custody, market structure, and stablecoins could compress risk premia over time. Policy attention rises after volatility, of course, and we just had quite a bit recently. So lawmakers tend to respond to headlines. Uh, for us, we just need to, number one, don't trade on draft bills because we don't know what the actual laws are going to be or whether they're going to affect us positively or negatively. We do need to monitor custody rules that affect how you hold your Bitcoin, and hopefully those rules continue to favor and protect our right to hold it in self custody because that is property rights, which seems to be an underpinning of our entire legal and uh, uh, investment system here in the United States and in the West in general. CoinShares dashboards as a weekly anchor. Monday flow notes set narratives for the week, so they're a good thing to watch for calibrating expectations. But we don't get trading signals from this. So again, when you're looking at those activity dashboards, don't fall into the trap of getting concerned about headlines. It's just good to know what's going on in the market and take that information as it comes. ETF flow tracker dispersion is another topic. Issuer dispersion does matter. Different channels and advisors, marketing push distinct flows. But you don't want to make the error of reading a single product or what is happening with a single product is the whole market. So you really need to avoid narrow inferences based upon that. So again, it's good to watch what's happening with the ETF flows, but not to get too focused on any one particular one. Although it does look like IBIT and FBTC seem to be getting the majority of the activity in the ETF space. We talked a little bit about gold. There was some brief chatter about gold to Bitcoin rotation, Bitcoin being undervalued, gold being going parabolic at the same time. As gold plunged 5% and silver plunged 8% on October 21st, Bitcoin momentarily spiked towards 113,000. So when the traditional safe havens roll over, Bitcoin can benefit, but again, let's not mistake this for a sustained structural rotation. It's just a signal, not a guarantee. But um, when you see a parabolic chart, you know it's got to come back down at some point. Um, that's the lesson there. Moving on to corporate treasuries of public companies. Uh, MicroStrategy bought another 168 Bitcoin on October 20th. So the corporate DCA continues through the volatility, and they are in alignment with long horizons. So this long-term stacking from public corporates reinforces the scarcity of Bitcoin because that Bitcoin is probably not going to move for a long, long time, if ever. And again, if you're in alignment with theirs, patience matters more than timing. Or as the saying goes, time in the market matters more than timing the market. Crypto Treasury premium post-mortem, there was $17 billion of retail losses, I guess, as the paper Bitcoin summer came to a sad ending. The takeaway from this is chasing NAV premiums and wrappers is a wealth leak. And the teachable moment is own the asset, avoid paying multiples for a look-through balance sheet. And, unless you think those multiples are coming back, and certainly, if you see a wrapper, a Bitcoin treasury company that's trading below the amount of Bitcoin they own, well, that might be a value play. Um, but it's a speculation, and you should treat it as such. If you are a saver, you just buy the Bitcoin. Mid-cap treasury ads, about 150 Bitcoin disclosed. The long tail of corporates is quietly stacking. Adoption is broadening beyond the marquee names. PR lag does not equal activity lag, so have to bear that in mind as well. And again, I'll put links to all the articles that we are reviewing here in the show notes so you can read them for yourself if you have the time. Moving on, mining, infrastructure, and compute. We have Core Scientific and CoreWeave. ISS recommending a no vote. Valuation fight over a $9 billion stock deal. Miners as AI HPC infrastructure is the battleground. No matter what the outcome, power and data centers are now part of the mining story. But we have to remember that the equity drama is not the same as the protocol health, and the network is agnostic. And of course, we continue to see all-time highs in hash rate as we move forward. Now, CoreWeave is urging a yes. The strategic vision versus price paid, both can be right or wrong on different horizons. The compute demand for AI is a secular force miners can tap to smooth cycles. So it will be interesting to watch and see where this one lands on the tie-up between CoreWeave and Core Scientific. Bitdeer reported September operations up 20.5% month over month with the capacity ramp. So hash rate arms race continues. Scale does matter post halving. The firms that manage energy plus uptime plus diversification will outlast the cycle chop. And again, miners, AI, HPC convergence, some broader covers. The street now prices miners on optionality, not just Bitcoin data. So these pivots indirectly secure Bitcoin by stabilizing miner cash flows. And again, if the miners can rely on these other sources of revenue, i.e., the AI compute, then they're less sensitive to, say, a Bitcoin bear market, which would force them to perhaps curtail or shut down their operations or go out of business. So in a way, this revenue diversification actually helps support hash rate, which is a good thing. We have Riot earnings coming up on October 30th. Talk tracks on power strategy, curtailment revenue, AI pilots, equity results inform infrastructure health, not your cold storage plans. So again, we are interested in this, and if you like speculation, the miners certainly have a lot of volatility. If you're into that kind of thing, um, they don't look particularly cheap right now, but maybe they will be. Moving on to Freedom Tech, Lightning, and self-custody. A couple stories here. First of all, Lightning for Treasuries earned via infrastructure. So the idea is route liquidity, reduce payment friction, earn non-custodial fees, a real yield analog. However, operations matter, channel management and liquidity policy are not set and forget. And then we have a Lightning Network fundamentals refresher. Layer 2 is for payments and UX, not for long-term vaulting. So it's important to remember that. And if you are using Lightning, you can use it to complete small transactions. And if you haven't, try it this week. Uh, Using it is better than reading about it. And really, one of the best ways to learn about Bitcoin is to actually use it in transactions and get comfortable with it. So if you haven't tried Lightning, download a Lightning wallet, download another one, put some Bitcoin in it, send it to yourself, and I don't know, use it to buy coffee. Next up, we will dive into policy enforcement and macro. First story we have here is Macro Pulse, October 20th, risk balance liquidity angst. So Bitcoin trades inside global liquidity. So watch that dollar, rates, and credit spreads to get a clue. Your fortress plan should survive all three macro states, easing, pausing, and tightening, because you self-custody and cold storage, and you're not exposed to risk and trading and futures and leveraged borrowing on your Bitcoin. US China overhang still in the VAR. So even without fresh headlines, risk premia linger. That's why bounces have been stalling lately. So expect headline gaps up and down. And again, structure your buys so you're not forced to react. So again, if you're just dollar cost averaging like I do every 2 weeks after the paycheck, you just buy. And sometimes you get a good deal, and sometimes you don't. But that's over time, that's going to work itself out. And finally, Congress revisits market structure. Talked about this earlier. The line between security, commodity gets picked at again. Custody segregation is key. So if regulation improves custody norms, that's bullish for mainstream comfort. Moving on to adoption and culture. The UK EU access momentum. Again, multiple regulated venues create redundant on-ramps, which reduces single jurisdiction risk. Geographic diversity diversifies liquidity and narratives, and then makes adoption less US centric. So we like to see that, although the EU has been sort of not very friendly towards Bitcoin and crypto. But that's probably going to change if people start asserting their rights to self-custody, their rights to own Bitcoin, crypto, in their who they support, who they vote for, which that's kind of what happened in the United States, and that's why the environment here has changed so much. Education spike after volatility. So vol brings curiosity, which brings adoption. So again, if you're new to Bitcoin, check out my beginner's book, and you can learn more about hardware wallet basics and stuff on my Substack. I have lots of articles on that if you want to check that out. Education is where it all begins. That's why I do this. That's why I do the Bitcoin Fortress Substack. That's why I wrote the books, is the more education that's out there, it all begins there. And then from there, you sort of fall down the rabbit hole, and before you know it, you're Bitcoin only. Well, not everybody ends up that way, but many do. The streaming and podcast universe is also pollinating uh, the education component. Mainstream audiences hear the story without the crypto jargon, which is helpful for onboarding. And I think more people are beginning to wake up to the fact that something's wrong with the money because they work harder and they have less. Uh, it costs more to for food and other things. So again, please share this episode with a curious friend if they're trying to make sense out of this, and maybe they become a gold bug, maybe they come to Bitcoin, or at least maybe they stop saving in the 0.3% uh, savings account at the bank and try to do something with their money so that they can preserve some of their purchasing power. We have a story on security incidents in this category. Well, actually, there's really no story. There were no major centralized exchange or mega hacks this week, so that's good. However, operational security lessons do continue. Make sure you patch your firmware, verify downloads, don't keep your seed in the cloud. Quiet weeks are a good time to improve setups before the next headline. But again, I think the best one was when FTX went down and everything they had on the exchange disappeared, whether it was real Bitcoin that was there or paper or whatever it was a real wake-up call for a lot of people. And it was a good feeling knowing that I knew where all my sats were and they were still in cold storage, and I knew exactly where they were and that they were safe and I didn't have to worry about it. So always good to check up on your operational security. Next up, venture company moves and capital. So the Masari tally, 31 deals, 197 million this week. So builders didn't stop. Capital still finds infrastructure, wallets, and dev tools. Price is the billboard, but building is the business, and building continues in bear markets and bull markets. And of course, there's probably some malinvestment that goes along with that, but there's also a lot of good things that come out of that process. Blockstream Capital Partners buys Bergland AG. So consolidation of Bitcoin first capital markets in Europe. Interesting thing to see. You could probably expect more credit lending and instruments built on Bitcoin, as opposed to an altcoin casino, when you see these Bitcoin only companies moving into the space. And again, it's probably time for that. There's a lot of people that would like to monetize their Bitcoin but don't want to sell it, and to have credit instruments available that you can easily use to borrow against without having to tell your life story and give up all your KYC information and provide reams of documents to the bank in order to get a loan. It's nice to just post up your collateral and get a loan like in 24 hours. That's pretty cool. Next up, miners equities in motion. There was some coverage on Riot and BTDR. Equity desks are rewarding energy strategy plus AI pivot and seem to be derating one-dimensional Bitcoin exposure. So again, the equity beta is not equal to chain health, so don't let stock P&Ls sway your equity decisions. Day by day ETF prints two-way, steadier inflows Thursday, Friday. So dip buyers reappeared. Reflexivity can turbocharge a good macro day. Um, Reflexivity is quite simply flows move the price, which lead to more flows. So it's like a behavioral feedback loop. And so we continue to watch that with great interest. There is some OG whale skepticism, sizable short put back on. There's always a smart counterparty. That's fine, but it does, that's what creates a market. But of course, your edge is horizon, not prediction. So if you stay solvent and stay sovereign, you're going to be just fine, and you can continue to watch the shorts get wrecked and the longs get wrecked as they go back and forth. All right, let's take a look at the podcasts for the week. So this week in the podcast universe, here are some of the dominant recurring themes. First, we have sovereignty and custody, multi-sig, insurance, self-custody, discipline, highlighted across a lot of shows. Macro and liquidity, trade shocks, rate signals, and liquidity cycles were featured front and center. Of course, everybody was talking about that because that was the news lately. Rails over wrappers, the conversation keeps shifting back to use the rails, Lightning and Cashew, rather than buy the token. And that's probably worth noting here that what makes Bitcoin, the network, stronger is using Bitcoin for payment. So if you have an opportunity, like I did, recently, I got a new wallet for my phone, and it uses a tap signer, the NFC card from Cold Card. So I ordered the tap signer, set up the wallet, moved a little bit of Bitcoin in there. But to buy the tap signer, they give you a discount for to buy it in Bitcoin. So I bought it in Bitcoin, and then I immediately replaced that Bitcoin that I used. So if you spend and replace, that is using Bitcoin. And again, if the fees are what they are right now, 1 sat per V byte, it's really nothing. So you can transact on chain right now, and a lot of vendors do take Bitcoin. I mean, if you want to buy a book from Safety's thing, they offer you a discount if you pay in Bitcoin. So use your Bitcoin on your wallet, send it via Lightning or on chain, and then replace it. That's really how you build the network. Buying and hodling is good, but using Bitcoin is what's really gonna expand adoption. And then there's, of course, a teachable moment that a lot of the podcasts reflected, which is the recent volatility being framed as new entrant education point. Many hosts encourage listeners to refine their ops. And of course, many people who were holding altcoins who were impatient and wanted to 10x very quickly and this and that found their stack go down to 0 or 90% or whatever. um, a lot of people were saying that that's maybe creating the next generation of Bitcoiners. Once you get burned enough, you'll uh, you'll know where to put your money next time. Uh, few interesting episodes to highlight. There was actually three from what Bitcoin did on October 24th, 22nd, and 20th. The 24th episode had Nick Bhatia on liquidity cycles and credit plumbing. He's always an interesting guy to listen to. 22nd was Leopoldo Lopez on human rights money use case, which is a very big use case for Bitcoin. And then on October 20th, Andrew Hones on institutional settlement rails. And of course, with Rabbit Hole Recap and Swan Signal Live, both covered custody, ops, and volatility from last week's crash. Again, use these takeaways to remind, I would use these takeaways to remind you that stacking Bitcoin isn't just about price, it's about sovereignty, structure, and habit. Did want to also mention before we wrap up this week's featured Substack post, Bitcoin Fortress. This is episode 4 in a series. Based on my initial book, little video clips, 1 minute videos on different concepts within building a financial fortress. So check that out. And it's like I think there's 8 episodes total in that little mini series. So this one's number 4. And then I did want to mention the books, and again, I'll have links to both the Substack post as well as the books in my show notes. First book was Bitcoin Fortress: A Simple Guide for Beginners, kind of a beginner orange pilling type book. Then the Bitcoin Retirement Plan, much, let's say, more complicated, deeper dive into all the aspects of and estate planning in retirement planning with Bitcoin, and the Bitcoin Lifestyle, which rounds out the series. So please check that out. Again, links in the show notes. And I would like to thank you for watching or for listening to the Bitcoin Fortress podcast. If today helped you refine your strategy, share it with a friend who needs a stronger fortress. Rate, review, subscribe, and I will see you all next week. And with that, bye bye.